Okay, well, welcome everyone to today's webinar on the 2023 Treasury Tech Survey results. This is Brian from Strategic Treasurer, and we're pleased you could join us as we evaluate the survey results and discuss the implications for organizations in 2023 and beyond. Our speakers for today are John Paquette, Vice President of Solutions at TIS, and Craig Jeffery, Founder and Managing Partner of Strategic Treasurer. Welcome, John and Craig, and I'll now turn the presentation over to you.
Thank you, Brian. John, it is good to be here with you again doing another webinar. It's been a few months.
Yeah, it has. It feels great to be back, though. Excited to be here.
Well, we're done with the unofficial part of summer. I think all the kids are back to school. Everyone who's on either LinkedIn Live or Zoom directly, welcome. Thanks for spending some time with us. You know, there's a lot of things that you can do in your afternoon or late morning, and we're glad you chose to spend part of it with us. We're excited. There's a lot of good information to share. I see a lot of chatter in the chat box, which is awesome, a lot of engagement. So what are we going to cover today? It's a survey, the Treasury Tech Survey. This is a survey we've run multiple times over many years. We don't run it every single year. We're going to cover this agenda. So what's going on with the survey? It's multi-year, over 200 responses were taken. We'll look at adoption and growth of technology. So what are some of the adoption rates? But we'll look at a range of technology, the use, plans to use, plans to adopt. And the good news for those who are technology providers, a lot of people plan to use it. Good news for you if you're seeking to add technology into your mix. Many of your peers have technology or are adding it. So it kind of builds the all my friends are doing this. And there's a good reason for it. Then we'll move over to what are some of the items of importance. Everything from vendor commitment to the products that they provide, the technology that they use. Using modern technology is very important to you and to your peers because that, well, ostensibly that relates to the longevity of value and the situation where value increases with a partner of technology versus staying stagnant or decreasing. When we move to AI and machine learning, a couple of areas where there's a real focus on AI and machine learning has been where it's been in the past, and it expects to continue. This would be for forecasting as well as for fraud detection and protection. There's a few other areas there as well, so stay tuned for that. Rather than the general headline, we'll get into some of the specifics and how that's calibrated. Then we'll look at exposures and risks. And the top exposure this year is interest rate risk. That's increased significantly from the last survey. Foreign exchange risk stayed about the same, despite the ongoing globalization. That stayed relatively consistent, is at number 2. And cash flow volatility, cash flow risk showed up at number 3, but there's certainly other risks that people are looking at. And then at the end, John and I will talk about a few takeaways from securing their payments to the rise of machines, how they're using that, and this idea of the product roadmap, how important that is to all of us in Treasury and how that's playing out with the surveys. Then we'll end with some additional comments about risk management. But with that, let me get into the survey overview. I mentioned earlier, over 200 people took it. For those who are on this webinar, thank you for taking it. It's easy to get well over 200 people on a webinar. We're well over that, more than double, almost triple that. And getting 200 responses to a survey is challenging. So thank you for taking the survey. We do know that it's good to learn information from webinars. And those who take webinars also learn quite a bit. Well, it ran for about 4 weeks. There's over 50 questions. Not everyone answered all the questions. And you can see very high concentration in North America, Europe, and Asia-Pac area were the next most dominant areas. You can see the different roles and titles. So mostly management level to senior management across the board. So we're delighted that TIS underwrote this year's edition. So thank you, John and Jen Noodle, who helped push that through, because there's a lot of good information for everybody to see. But that gets us into the first set of Treasury Tech adoption and use, John. I know you've got a few things to say on this front.
Yeah, for sure. So I think some interesting results here to kind of kick us off as we kind of evaluate the results of the survey Craig just mentioned here. So, here we're looking at Treasury Tech use and adoption over a multi-year period, both in terms of the current use and what people plan to begin using within the next 2 years. And you can see, right at the top here, Treasury management systems kind of still reign supreme in terms of the Treasury Tech that most organizations have in place. Kind of surprised that there's 30% of companies out there that still either do not have a TMS or don't plan to use a TMS within the next 2 years. But it could be that a lot of companies are using solutions that are more embedded into their ERP system that might be becoming more commonplace, or so-called best of breed solutions that maybe just focus on specialized areas of treasury management like cash forecasting or payments or whatever it might be. Still probably the same out there that are maybe still using Excel and e-banking portals as their primary means of technology as well. Fastest rate of growth for plan to use over the next 2 years is actually bank fee analysis, though, at that 20% that you see there in orange on the second bar graph there. I thought that was interesting. I mean, obviously, everybody's kind of got their eye on the economy. I'm sure budgets are tight. Treasurers are always thinking about bank fees. Interest rates are increasing. So, treasurers are probably looking to see corresponding increases in ECR rates and maybe looking to evaluate their, the bank partnerships and their bank fees more holistically. So yes, it's good. It's good to see that getting a lot of attention. Also kind of interesting too. So there's and I think there's been a lot of advancement in that space in the market too. So maybe it's driven a little bit by the technology that's kind of come to market to help treasurers in that space as well. Get into a couple categories here like reconciliation and procure to pay that I think have always kind of received a lot of attention from organizations in terms of upgrading their technology. So they seem to be a little bit lower than the first two here, the TMSs and the bank fee analysis type solutions. So maybe organizations have accomplished a lot of their goals as it pertains to that, and there's still investment going on there, but it's not the sort of rapid paces you're seeing in other areas of treasury technology. And then the two that kind of round things out here, both payment factory and treasury aggregators, coming in at kind of the lowest percentages of both currently in use and near the bottom here for plan to use within the next 2 years. I think this might be driven a lot by demographic, honestly, because payment factory solutions and treasury aggregators. If you're not familiar with a treasury aggregator, it's sort of a solution you can put in place to manage bank connectivity, bank communications. If you have a broad portfolio of bank relationships and you're looking to simplify that, and so obviously those two technologies probably are more better utilized or might generate a better ROI for organizations that are large, global, complex, multi-bank relationships, right? Which might not fit the profile necessarily of everybody that took the survey. But I can tell you, if you were to look at upper mid-market, globally complex organizations, these two factors here are huge on the list of what those companies are looking to do to modernize their strategies. And I think we even have some interesting results on the next slide that indicate that some of those trends we're seeing kind of push downstream a little bit too in recent results and recent history here. So this slide just calls attention to some of the sort of the key trends here that we're seeing across technology adoption from the survey. TMS is seeing 100% growth expected in the medium to small business segment, which is sort of characterized as less than 5 billion, the way that sort of the results were kind of cut here. And I think that makes a lot of sense because TMSs were almost that type of technology where there was sort of this expectation that you had to have a certain level of sophistication, complexity within your business to really, necessitate having a TMS. Otherwise, maybe they were too costly, they were too much to implement, they were too much to maintain, particularly in the days where you had like sort of on-premise installed TMSs or even treasury workstations and things. And the technology's changed a lot. So now these applications are SaaS, they're modular, you can pick what you want. They're all cloud-based. So the barrier to entry is much, much lower. And this technology is almost for everybody now, the way that it's sort of been staggered. So we're definitely seeing a lot of growth in this segment, particularly between the 1 billion and 5 billion space. That seems to be, kind of the sweet spot where a lot of treasury technology, treasury technology is starting to be put in place in businesses where it wasn't previously. Reconciliation, I think you're seeing kind of like the same trend as well, where sub 500 million businesses are starting to invest in technology just because it's becoming so much more accessible, the way that it's designed, the way that the software offerings are put out there in the market. I think also maybe an increased pressure on cash flow. So if you're reconciling more frequently, you're able to identify outstanding receivables more quickly. You're able to track DSO better and bring down DSO to increase cash flow. A lot of small businesses are super focused on that right now, so that could be kind of driving some of that adoption as well. And I think this was the stat that I was referring to on the previous slide here, that medium to small businesses expect to sort of double their adoption of payment factories, which were really sort of a technology that was reserved for the the over 5 billion market, previously maybe the upper mid market, enterprise level organizations with really complex global payment needs. And now a lot of other businesses are starting to see the benefit of more efficient payment processes, better aggregation of payment data, better control over centralized sort of payment factory, and what that does for processing efficiency as well as risk like fraud mitigation, right? So, and then treasury aggregators expecting 100% growth in business in North America. That's an interesting one to me as well, because I think in the European market, based on what we saw, treasury aggregators probably came to market a lot sooner, and they became a lot more commonplace for organizations to put in place as a way to manage their bank connectivity strategy, particularly with those that had really sophisticated bank connectivity needs. And in the US market, it kind of almost stayed as, hey, we have a TMS, let's manage bank connectivity through the TMS. That mindset is shifting a little bit, and people are seeing the value of just managing bank connectivity and your communications and your formats and your protocols through something specialized in doing that, and having that feed downstream applications like a TMS or ERP or whatever it might be, right? So emerging market in the US, and something that's getting a lot more attention, I think, in the typical treasurer's list of technology tools. So I thought that was an interesting stat too.
Some good points, John. And I'm not really disagreeing with one of the things you said on the previous slide, but you mentioned how it was a lower number for aggregators, and I think for payment factory. But I guess it is a lower number in terms of total percentage. But when you look at the percentage growth, these are 60-70% growth which is higher, right? It's a smaller percentage, whatever you call it, smaller percentage utilization, but the growth rate is looking to move up more, the hockey stick curve. So that I think is good for those who are selling payment factories and aggregation services. Like you said, there's a significant difference between sizes of organization. I think that's probably good news. And you made a really, really, really good point about some of these technologies are becoming more accessible. This democratization of technology becoming much more accessible. That's a really notable point. And so it does move downstream, that the largest companies could always afford it, and it was out of reach. Now it's within reach. So some really, really good points there. And I think that makes a difference on what people do in their organizations, right? How they support paying for some of this technology, making the case. So, John and everybody on here, what's your current and planned use of tech? There's a double stacked question. These are both select all that apply. The top section is, what do you currently use? And the second is, what do you plan to use within 2 years? So go ahead and select any of those that you would like. John, the breakouts between Europe and North America, for example, I think that was pretty insightful as well. The growth of aggregation was much more dominant in Europe. There were a lot of smaller markets. Companies were in a much more complex situation. They were in multiple countries. They're becoming international companies, happen sooner than in the huge US market, for example. And then I think the US market's catching up with that complexity, being in multiple markets. So those complexity solutions have to address those needs.
Yeah, I agree completely.
All right, we've got a result now. John, let's see what's happening here. So you can see the history up top, which is, let's not comment on that too much, because we've got survey results, and polling results are interesting too. Which do you plan to use? Treasury aggregator, 20%. So this is quite a good thing for you, right? The payment factory and treasury aggregator, 1 in 6 and 1 in 5 companies here, which is higher than the survey, are interested in this type of tech. They're planning to use it within 2 years. So that's good news in a lot of ways. Any thoughts on this?
Yeah, I mean, agreed completely. I think the top two are still the same. TMSs and bank fee analysis solutions, so no real surprise there. But yeah, FX execution platforms jumping up to 30%. I guess people are probably thinking more about fluctuations in exchange rates and managing currency risks and things like that. So that one's definitely interesting to me as well. But I think, yeah, the treasury aggregator numbers, the payment factory numbers are are probably great and indicate, I think, exactly what we talked about on the previous slide, just the growth of those areas in this particular market, in the US, and how, solutions, organizations becoming more global in the US, or just looking for new strategies for how to manage things, are really kind of leaning towards some of those solutions more than they were previously.
Yeah, and as functionality grows in any of these individual platforms, they tend to add services that bleed over, right? What are my FX exposures? Or, I can now connect to more banks with this tool or that tool. Really interesting. Thanks everybody for responding to this question. If you would like to see the results of these poll questions, go ahead and type the letters TIS for TIS, or you can type Paquette if you spell it right. That's probably too hard. But if you type it in and we get, let's just say 150, there we go. Someone typed in Paquette. So you're doing great, Sean. We'll include it and send it on this slide to everybody. So yeah, thanks. Cloud, the internet, for those of you who aren't 25 or younger, you may remember the phrase ASP, application service provider, and then it became cloud, and then we became software as a service, and we switched the words. Some of the meanings changed slightly, but this idea of everything moving into the cloud. This is the cloud as a way of hosting and providing services is dominant across all categories. Significantly more than half of all current and planned use sits in the cloud. It's moving in one direction. No, there's nothing that's moving back to on premises. It's all moving to the cloud. This is a multi-year trend, and some of these it's well over a decade or more than a decade and a half. TMS, the first cloud versions were coming out around 2001 and 2001, and then within 4 or 5 years, the majority of new sales were happening in those spaces. And so that's taken place too with Treasury Aggregator. An aggregator is, as we define it, is it's a payment factory. So being able to format payments, send them to any bank that's needed. It also acts as a data consolidator, can connect to all the different banks, pull in balances and transactions, and then push those into whatever underlying systems you need, from your data lake to your accounting system to a TMS to whatever you need it. A netting platform is those companies that do a lot of intercompany activities, oftentimes global, and they net the trade activity once a month, reducing the FX and transaction costs that are inherent in paying yourself in multiple jurisdictions. So some really good points there. So the cloud is dominant. We've known it's been dominant. It's been significantly the platform of choice, and that continues to grow, and distinctions continue to emerge. And so here you can see the calibration of how far along these different technology players are. In the report, we share information on a few different platforms as well. But that brings us to what is influencing the decisions to buy. What's top? Looking at the top one, vendor commitment over time to the product. When you think about how do I future-proof my purchases, how do I protect my organization, there's a couple of things that certainly come to my mind and come to many of all of our colleagues on the phone. One is you have to have a vendor who's committed to the product, and that can be more or less concentrated if you support 12 different industries with 17 different types of products that all may be in favor or out of favor at a particular point in time. But showing commitment over time to a product is the number one dominating reason. It's extremely important. So that's number one. What's number two? You can see we've sorted them. So the next blue item is leverages modern technology. So why is leveraging modern technology? Well, that supports faster implementation, better integration, is more scalable, provides for greater longevity. And so you can see this, things like supporting API use, machine learning. The ability to leverage modern tech is number two. And I don't think that's going to decrease. And so when you're thinking, am I getting technology? Am I in super current tech, proven technology that's still current, technology is a little bit out of date, but that's, well proven, or am I looking at something that's older? That's a key factor in people making those investments. So if you look at the third and fourth row, John, when I looked at this, looked at the results, I was pretty surprised that both roadmaps were really high. And you can see, one's a little higher in, extremely important and important. So the robustness of the future roadmap, 4 out of 9 people picked that or identified that as extremely important. And 4 out of 10 picked it as important. So you can see 84% saw this as important or extremely important. That's about the future. And then the historical delivery is, 39% saw it as extremely important and 49% is important. So when you think about the roadmap, you can't build a reputation on what you're going to do, which is a great way to say, you gotta have accomplishments, but you need both. You have to have accomplishments and you have to have a robust future roadmap. And this is what, the survey respondents are saying is we want both. They're both important. They're both very important in different ways. Then there's a notable drop off between the leadership at the vendors, the strength of the balance sheet. Some of those things become, if you look at how many extremely important items there are, the balance sheet, is the vendor profitable? What's the revenue size? Those are in the, low double digits, right? 13% to 18%. Not that they're unimportant, but you can see how they're very much lower than some of the other ones. John, as you look at these, I didn't know if you had any comments on this particular slide. I think this is worth weighing in if you had anything that you wanted to push out.
Yeah, I mean, I think to me, it just reflects that, a lot of the technology that treasurers are using is changing right now, and there's a lot of sort of coming to market technologies that are starting to see their use cases, but maybe aren't fully baked yet. There's open banking APIs and things like that organizations can begin using, but might not meet all of their use case needs. There's AI and machine learning, and there's sort of a mix of sort of folding that into existing software solutions. So if you're out there today buying software, probably the most important thing to you is just knowing that you got on the right bus, right? You don't want to make a bad decision. You want to make sure you're with a provider who's going to see these technologies through and deliver on the use cases that you really see most valuable to the treasurer in that respect. And I think you're seeing a lot of that infused through these results, in terms of just the focus on the roadmap, right? Is this provider committed to investing in this product that's important to me? Are they going to keep it modern? Are they going to keep it best in class? Are they going to kind of let it fall to the wayside and put their resources towards something else, right? You're seeing a lot of that, I think, just because of how much the technology is changing in the market. So yeah, I mean, it makes total sense to me, especially the first 4 here, on here, and then it gets a little bit muddier. But I mean, at the same time, a lot of these software providers are private companies. Are you really going to know if they're profitable? Are you really going to be able to get a look at the balance sheet? Probably not. So, but yeah, the financial strength of the company, obviously, people want to know that with the provider that's going to be around for the long term, but it seems much more so they want to know that they have a good vision for what the future of Treasury is. So
yeah, it's such a different model than it used to be more than a decade ago, right? A decade ago they were installed solutions. There's a huge upfront fee. Now here's a subscription, and so it's a much smaller nut for making payments, but it takes longer for the companies to ramp up in terms of higher revenue because they're not getting paid hundreds of thousands or millions of dollars when they do a sale. They're getting a monthly subscription. And so it just tends to grow over time. Yeah, really good stuff. John, thanks for jumping in on that. Yeah, you're up on this one too.
Yeah, that sounds good. Yeah. So, I mean, looking at the top importance, what's most important to corporates here. So, 45%, this first graph you see here at the top, limiting the disruption to our IT group while driving long-term benefits for short-term costs. So this is kind of the top importance factor here, and actually measuring it for results 2 years prior is up 30%. And I think this is something that we hear just all the time. Every single customer prospect we talk to, they want to know what's going to be the strain on our IT resources. Is this going to sort of disrupt existing IT projects in motion here, or will our project somehow get sidelined because we can't pull in the right resources we need to really be able to deliver this project? So no surprise to see this being so important. And I think, also the buyer has every right to sort of expect this, because the whole model for the software these days, SaaS, is a pre-built solution. The software is completely finished at the time you purchase it. It just needs to be configured in accordance with your expectations. And the cloud hosting model, it's fully hosted. It's not as if it has to be installed anywhere on premise. There should be virtually no IT resources really needed to implement these solutions, right? So I think that the good providers out there in the market can really deliver on that promise. There's also just so much going on from an IT standpoint these days at most companies. I mean, the number of cloud ERP migrations that we know of that are going on right now is huge. A lot of organizations looking to take advantage of that, migrate all their entities to a single ERP in the cloud, and take advantage of sort of the unification of financial operations that comes with that, right? So, and just a lot of organizations really focused on that IT resource topic as the main driver for success in their treasury projects. And then you have enriched formats, for interoperability with existing systems, or just getting more information in the files that you're receiving from your banks for different business purposes, maybe for reconciliation or forecasting or analytics purposes, which looks like it was at the top spot 2 years ago, and it's actually down from 41%. So it decreased by 1%. Am I reading that correctly here? I think so. It's more or less stayed the same, I guess, over the course of 2 years, but there's just the IT topic kind of jumped ahead of it, right? Over the course of, that's what it looks like. So, and I mean, that's still definitely in focus. I think that's definitely what we're hearing in the market too, particularly around ISO XML migrations. A lot of companies are doing that just so they can get more information in their reporting files to increase their, automatic reconciliation rates or hit rates on, sort of the cash posting process, get real-time confirmations for payments and things like that, right? They're really looking to use enriched formats. And I think this whole topic, the data analytics topic, is one that's been a big one for the last 2, 3, 4 years, probably. And when I see this interoperability with existing systems, I get the sense that the respondents are indicating that they really want to have API connectivity between their downstream systems, and just this sort of unification of data to break down some of these legacy data silos, where if you had multiple systems, the data was trapped there. It couldn't be sort of analyzed centrally, shipped off to a data lake or into a TMS platform where it could all be aggregated, analyzed, normalized, right, for analytics purposes. And I think that expectation is probably still the same as it was 3 years ago, and probably will continue to be the same moving forward. So, and then not changing connections that are working fine or staying currently. Obviously, don't break what's working for us already. That's a major concern for organizations, particularly when they're going through, global organizations going through a finance transformation, who might be in a more of a decentralized model, because in those cases, you have probably certain business units that are ahead on the automation curve in comparison to others. And you want to move things to a global model, but you don't want to break the good work that's been done in certain, regionalized processing centers and things like that. So it's always something that we like to consider in the course of our projects as well. And I can see why it's, kind of one of the top concerns here. So.
Yeah, from some other surveys, John, the issue of what's a big roadblock or impediment to implementing new technology? It's management priorities, and it's IT resources. Those tend to be pretty big, and IT resources is usually at the top there. And so you can see that playing out here. It's like, I've got 20 things to do. If 5 of them are working, why am I going to move them up from maybe they're not optimal, but they're pretty good, when I have other situations in tech that's pretty terrible. So those are, pretty rational approach to what we have seen go on there. So we're going to pop with the next poll question, and I'm going to give some instructions as well. So this is for new and expanding product development. What's important to your organization? Select all that apply. We assume that there's at least one. We didn't say none, so you'll have to pick which is the most important if there's only one. If there's multiple, you can select all that you have there. So I'll let you do that. But there's a couple of questions that came in. I'll go ahead and answer those, or start to answer those as just to clear this out. So, can you define payment factory? I think I sort of did that. It looks like that came in maybe before I said it. It's a system that takes, information input maybe from AP systems, could be treasury systems, could be admin systems, takes that information in, can format the payments, can do any type of validation that's necessary, can establish the connection, do confirmations, make the payments happen, deliver them, whether it's through SWIFT, through a host-to-host connection, through APIs to do that. And that would be a subset of what we refer to as treasury aggregators. That'd be the payment side. So I'm going to type that. I'm going to list that off as that's been described. If there's more, feel free to type it in. On the another question came up. What are the benefits of using a treasury aggregator if you are already using a TMS? And I think there's a couple different forks in the road there. If you have a couple of your banks, let's say you have 5 banks are already connected, why would you use a treasury aggregator? I think you can make some reasons for that, but that would be harder to justify. But let's say you have to connect 10 or 20 banks, and you're not just using them in a TMS, you're using that data in a recon platform. Maybe you're pumping that information into a data lake. So how do you do that? That design of the data matters. And that's where you see an increased value in having a treasury aggregator. The more complexity, the more number of connections back into your back-end systems makes a bigger deal. If you have one bank you're connecting to, do you really even need a TMS? You just look at the bank portal. So how do you simplify your structure? Those are a couple of things. So John, did you want to jump in on that?
Yeah, maybe a little bit. I mean, the other thing on the treasury aggregator is the flexibility. If it's built into the TMS, then, what if you decide you want to move to a different TMS or a different, strategy for your treasury applications down the road? You have to rebuild all your connectivity somewhere else. Where if you kind of have it sitting outside of that, outside of the TMS, you can swap your applications in and out. You could bring in a new TMS, hook into the aggregator, bring the bank data in that way. And of course, you're enabling all other parts of the business to leverage that same bank connectivity. So the ERP systems, the payroll systems, anything else that might need to leverage that bank connectivity can go through that one unified channel. And I think the other trend that we're seeing is that, the treasury aggregator is the entire business's conduit to the banks. It's the way all the companies, all the departments of the companies, whether it be AP, payroll, accounting, or treasury, access the bank relationships. And so having that externally is a benefit for Treasury, because Treasury doesn't want the TMS to be that, because they don't want the whole business in the TMS. They want the TMS to be Treasury's application and really being used for Treasury's day-to-day. So if you're doing things like evaluating, hey, a payment file failed, or I got a negative response from the banks, it's nice to have that sitting in a system that's external and away from Treasury's applications too. And there's a bunch of other benefits too, but those are just two that kind of jumped into my head there. So.
Yeah, thanks for that. So now we have the results of the poll here. John, you want to start? I've got a few things I could say too, but I'll give you first crack.
Yeah, I mean, the fraud detection, which I think actually we have some results coming up here in a slide or two that kind of echo that response. There is that being a top sort of emphasis point for a lot of companies wanting their software developers to invest in. Forecasting has been, I think for the last 18 months, maybe one of the biggest topics, if not the biggest topic in treasury management. Everybody's talking about cash forecasting, the unpredictability. People are seeing day-to-day on cash flows, looming economic downturn, rising borrowing costs. All these things are filtering into, just treasury organizations spending a lot more attention on the forecast and wanting to be able to more proactively manage cash versus just create sort of forecast reports. So I can definitely see why that one's up there. APIs, that one's it's been a popular topic for the last 3-4 years and seems to be continuing to maintain momentum. It's definitely something that you can clearly see the treasury practitioners in the market see the benefit of and want to see advanced both by the banks and the fintech companies. So top 3 definitely makes sense to me. Kind of quickly scanning the rest here. Yeah, I don't know, Craig, is there anything that kind of jumps out to you here as a surprise?
Well, thanks.
Is low, which is kind of a surprise, I guess.
Which is low?
AI and machine learning.
Yeah, I think this is that it does seem low to me. The other is platform as a service. I think most of the people on this webinar are probably treasury experts, not necessarily technologists first, and so. Some of the language we use here is not as attainable. I guess, what does platform as a service mean? You ask people that, it's like, that's harder than a payment factory. Like, what does that mean? What is platform as a service? If we spend some time describing that, to say, the use of like AWS and Azure, where it's fully scalable system, like the entire platform's there that you call those services, utilities, and develop in there. And that's in combination with SaaS, and SaaS doesn't necessarily have to follow the platform as a service. So that one was a bit of a surprise. I think things like natural language search and the utilization of AI and machine learning, those tend to be easier to do when you're writing on a platform that's inherent in what you can do in that platform.
Mhm.
And I think as we grow and learn as a profession and pick up some of the newer tech, I think these are going to shift over time, because are you not going to want that? I think everybody's going to want that. AI and machine learning, sometimes that becomes, that's too much. It's too much hype. But there's, I think we're seeing the rapid growth of it, and it moves from being ineffective to quite useful to extremely effective. So it's just really good to see this snapshot. Just like a survey, a snapshot on via a poll is quite good.
Yeah, and that ability to benchmark performance, that'd be an interesting one to dig into more too. I know that there's a big appetite from corporates on the bank fee analysis portion, where they want to be able to benchmark their fees through their bank fee analysis tool against some of their peers to understand what they're paying in comparison to them. But I wonder if that extends beyond that, even to like, say, forecasting solutions. Are we forecasting as accurately as some of our peers and things like that, right? So that's
it does. We use quite a bit of data for helping companies benchmark. Usually people want to know. Tech firms want to know because they're building products for it. And everyone else wants to know what's going on, what others doing, where are we against others. So that's 37% saw that as important. Yeah, some good stuff here. Thanks for your comments, John. And just so you know, in the chat box, we had asked for 150. We kindly asked for 150 people to type in TIS or poll or Paquette. We were 32, 31 short of that number. So I don't ask anymore. Just maybe you guys could just type it in. It's fun. We love it. All right. John, that brings us to product development. I know that's near and dear to your heart.
It is, yeah, and I think this is the result that I was alluding to in the last poll there, where currently the most important product development initiative for most corporates out there is fraud detection. 76% are kind of indicating that, right? So makes a lot of sense. I mean, there's a ton of fraud risk out there in the market today. BC, business email compromise, is still out there. There's still rising success rates of BC attacks, which is crazy, but it's because those threats are getting more sophisticated. The criminals have better knowledge, through internet and through sharing, and are even incorporating an AI and machine learning and things like that into those attacks to be able to kind of make them look more realistic. And then, AP departments, supply chain departments are under attack constantly through the fake invoice attacks, fake wire instruction change request attacks that are, kind of coming into those departments all the time. There's internal threats, there's collusion, there's social engineering. There's just so many threats for corporates to keep an eye on these days. And it's to the point where even just having sort of really good financial controls, payment controls in place within your organization just isn't enough. And you can clearly see the market looking for something that's going to backstop all those processes and help them detect anomalies, potential fraud, stop it before it goes to the banks, and sort of really help be that sort of firewall between the corporates and the banks. So looking to top expected growth and importance, important to us now and will be important soon. Expanding ecosystem of partners. I thought this was interesting. So, 23% now, and then 40% in the future. I tried to sort of wrap my head around this result. I don't know, Craig, if you had any thoughts on this, but, I'm thinking like, bring in your ecosystem partners into your treasury management application. Like if we were thinking about a business that's looking to do real-time cash management, obviously there's a lot of different partners that might be involved in making that happen. So, your positioning and your forecasting in one tool might be bringing in your bank balances, might be bringing in your cash investment balances. It might be with one of your partners, might be contemplating what you have on a revolving line of credit, might be contemplating what kind of offers you might have in the supply chain finance facility to pull in some cash early or something like that. All these that kind of make up, sort of, different opportunities and different, aspects of a company's total liquidity and access to funds these days. And if you really want to really manage things real time in that respect, I think you need a partner ecosystem or platform that's able to bring in all the different cash management services that you're really using to kind of run your treasury department. So, but I don't know, Craig, if you had other thoughts about what might be driving the sort of the increased importance in that and the sort of near term outlook. So.
Well, this is largely speculation. So for those of you who read the more detailed report, it doesn't tell us this, but here's what I think. The expectation around embedded treasury, embedded banking, whatever you think about, is you want a more seamless experience. You don't want to be thinking about, like, when you get rideshare now, like, it's no longer I call on a phone. I keep calling to find out where things are. I get in there, I have to figure out about paying, and I got to save a receipt and submit it. Now that would drive you insane today. You just like it's embedded. The map that shows where the driver is, what the rating is, what their name is, all of that, the embedded payment, the receipt, the invoicing that comes and manages it. It's all embedded. And that just is like, it's not because it's so awesome. It just removes all the headaches and friction. And so I always think about the expanded ecosystem partners, the use of APIs. These are things that help reduce that friction, for that environment. So I see these as similar. That's how I look at it.
Yeah.
But I don't know that we can really see, what everybody thinks in their minds. Like, why is that important? We asked 50 questions. If we asked all those questions, we'd ask 110. But people want less friction. I know people want less friction. And so these are two things that lower that friction. And so that's why you see growth of like more than double for ecosystem and essentially double for APIs.
Mm-hmm. That makes a lot of sense. Yeah, I think you're exactly right. That sort of consumer experience everybody has gotten so used to about everything just to like pop up notifications, your driver's going to be there in 2 minutes, these types of things that just make your life so much easier. Maybe they're expecting a lot of that to get into the finance applications as well, which makes a lot of sense if people are trying to be more proactive about, how they're managing cash and how they're managing these operations on a day-to-day basis. So,
yeah. Well, we've got all our poll numbers. That's awesome. Now we're looking at I think it's our final poll. So a little bit of sadness. We announced that. What emerging technologies do you think will be the most beneficial to your organization? We've got 5 examples. You can select all that apply. Use of machine learning and AI for fraud detection or security. Use of ML AI for forecasting. Open banking APIs for real-time cash visibility. Real-time payments. Embedded finance, which is an umbrella organization. In the chat box, you'll see follow TIS on LinkedIn and follow Strategic Treasury on LinkedIn. We would really encourage you to click those links and follow the companies. That's a way for us to stay connected. It's also fun. Nobody else needs to type in TIS in the chat box. We're well over our 150, so thank you for that. And Brian, while everyone's answering that, if you could also drop in the CTP credit LinkedIn group, that would be great. I know a lot of people here are CTPs. That's also a good way to get notification. So, all right, we ready to share the results here? Nothing like a poll on a survey results webinar, John. This is embedded finance has fallen off the chart. Everyone's pretty close, from 51 to 62%. I don't know. Any quick comments on this, John?
Yeah, I mean, I think, it seemed like just perception that AI machine learning kind of overtook open banking APIs in terms of like the big buzz sort of term for 2023 in comparison to 2022. So if I had a guess, I would have said that use of AI machine learning for forecasting would have been tops. So I'm a little bit surprised that open banking is, but it's good. I mean, you can clearly see the corporates really want banks and fintechs, like I said before, to deliver on open banking APIs and some of the use cases around that. So, but yeah, and embedded finance being so low, it's interesting, but maybe that's not as well understood as some of these other terms. And yeah, so that could be driving some of that as well.
Yeah, certainly technology firms and banks are talking about embedded finance and APIs very regularly. Thanks everyone for responding to these polling questions. Thanks for your comments too, John. That brings us to AI and machine learning. John, you're up again on this one and on payments.
I know, and I know we're kind of running on maybe a little bit long here, so I might move kind of quickly through these next two. But yeah, AI and machine learning, like I mentioned, a lot of interest in these topics, and I think you can clearly see from conversations, from survey results, from sort of any of the industry publications out there, that the two biggest categories that people see a lot of promise in are forecasting and fraud detection for AI and machine learning. So no surprise there. And then there's other areas where people see there's potential benefits for that. I think, receivables, cash applications, automation, and some of these other aspects are probably good use cases for it as well. Certainly a lot out there. It's gotten a lot of attention, particularly since the launch of ChatGPT kind of made AI and machine learning sort of more in the public forefront. So, and I'm definitely seeing it applied in both cases here, forecasting and fraud, at least starting to be within solutions itself. And then, the sort of the difference between small and large organizations in terms of how important it is. You can see it's much more important for large organizations, it looks like here. Definitely important for both. I mean, I guess large organizations, on one hand, they have more data to analyze. And so, really AI, machine learning, and forecasting is supposed to help the treasurer pick out those trends, those abnormalities, those opportunities in ways they might not be able to, just because they're sifting through such a massive data set. So give you like those, more tuned in insights that might not be available at the surface level. So I think that might be part of it. Other part of it might just be that large organizations, for reasons we talked about at the beginning, are just further along on the technology curve. They adopted forecasting solutions earlier, right? So it's more natural for an organization that is in sort of a place where their forecasting process is automated today to want to take it to the next step and apply AI and machine learning. Or a small company who might be on Excel, they might not have the forecast model. They probably don't have the data to really make good use of AI and machine learning. And so that could be driving some of the sort of, I guess the difference there in importance. And then, at the bottom here, this caught my eye, the differences in views of the importance of AI machine learning for fraud detection, 93% in Europe versus 71% in America. And I saw that got my attention. I was trying to figure out why that might be. And, kind of what jumped to my mind immediately might have been some of the services that are available in North America that aren't available in Europe, such as account validation services like early warning, which is, I don't know if everybody's familiar with early warning, but a syndicate of banks reporting their account information, and it can be used for account validation of beneficiary payment instructions and things like that. Services like that don't really exist in Europe today because of data privacy, GDPR regulations, and things like that. So you don't have that resource that you can use for fraud detection purposes. And also in North America, we have a lot of these integrated payables programs, virtual card, ACH Plus, that actually don't require the corporates to even maintain wire instructions within the ERP system to make payments. And that removes a lot of the fraud risk as well, right? So, and a lot of that stuff's not as typical in Europe. People are more storing wire instructions in the ERP, putting them in the payment file, sending them off, right? So I guess from that respect, it's harder to detect fraud in Europe. So it doesn't surprise me from that point that they're looking for more advanced tools to assist with that fraud detection process versus in North America. But Craig, I don't know if you had any other view on that. Otherwise, I thought that was pretty interesting though.
Yeah, when we see a difference, of more than 10 or 15% by region or by size, that it's worth noting, right? That calibrated exposure is useful. There's quite a bit of information. The full report's available for download. I encourage everyone to get it. You can share it in your company, or just encourage people to get the link. I know we're winding up quickly here, John. If you could cover the wire payments, I'll take asset classes after that.
Yeah, that sounds good. So, in terms of companies, what sort of functions, I think this is what they have in place, right? They currently have for these particular functions, 2021 versus 2023. So you see growth in, basically everything here except for account validation services, which is kind of interesting. But, you can attribute a lot of this, say, confirmation of delivery instructions from the bank, maybe to migration ISO XML, where you automatically get a confirmation back from your bank that the payment file has been accepted or rejected, right? So naturally, you're going to see that get, more and more, grow more and more over the years as just ISO adoption grows too. Validation of bank information, there's good, tools out there to be able to do that today. Probably the Swift Ref directory, which is incorporated into a lot of, SaaS products these days, is a great source for that. Confirmations of checks formats, like Craig mentioned, that probably indicates adoption of payment hub type products that are able to do that on your behalf. But validation of account information kind of echoes back to that point that I made about early warning in some of these account validation solutions. And I'm wondering if you're not seeing the growth necessarily because this is a global survey and those solutions really are only really available today in the North America, US market. So that could be some of what's driving that to be a little bit stagnant too. So the other thing that caught my eye, validation of sanctions, that shot up big time, 11%. But I'd have to think that you could attribute that to the Ukraine conflict and the constant shifting of sanctions, beneficiaries that were sanctioned, individuals, banks, and sort of how that jumped into the forefront of a lot of organizations' minds when that sort of all unfolded. So, but yeah, those were kind of the key things I noted, I think, on these results.
Great. And another item we asked about, where were the exposures? What are the exposures that people face? And what's changed? Do you have the following significant asset class exposures or exposures and risk? What popped up if you go from left to right? We went from 49% identifying interest rate risk as a significant exposure to 63%. So a solid 14% jump. Europe had the lowest, identified that as the lowest interest rate risk exposure. Europe on the FX side, not totally surprising, but Europe had the highest FX exposure at 83%. Yet when you look at 2021 to 2023, the gap there was pretty much flat. It was a 3% shift, which is, I would say is probably within the margin of error. We look at cash flow risk, that's declined from a few years ago. So a few years back, you guys probably remember COVID, concerns about payments and flows. We were a bit in the throes of COVID and the repercussions there. That's dropped by 9 points across the whole environment. One of the things that surprised me, John, and I'm just going to say this as biased opinion, counterparty exposure falling from 39% to 33%. It makes me think about in 2021, we didn't really have banks filing for bankruptcy or becoming insolvent, being seized by central banks. We do have that this year. We've had a number of cases. So when I think about counterparty risk and counterparty exposure, oftentimes that's with our large financial institutions, but also it could be on trading partners as well. So I don't necessarily understand why that has dipped. We didn't ask questions about it, so we can all freely speculate. But if anybody's got some great ideas about that, type them in the chat box so we can come up with a good reason. So there we go. So as we go to final thoughts, a couple ideas. I'll draw your eye back over to the chat box if you can find it. There's the report link that Brian loaded. There's also the CTP group. So click on that link, the CTP group, and request to join. We'll get those approved today. That's for those who like CTP credits. That's another way of getting attention for that. So please do that. That helps us out. It looks good. And then download the report where you have more information. John certainly talked about what are some of the differences between Europe and other areas. What do they have? So we can pull some more data out to test these hypotheses. But John, if you could cover the first 2 pillars, I'll cover the last 2.
Yeah, happy to do that. And definitely, these are all key themes, I think, throughout the survey results. So payment security is definitely a top concern. You can see that through the way people are investing in technology, implementing payment hub type products just to sort of put better controls, better standardization around their payments processes, but also through their interest in fraud detection tools. You saw that throughout the results as well. And, the role of AI and machine learning, I think, in the fraud detection process, now that can be a sort of a valuable instrument for the treasurer as well. You can clearly see that fraud's not going anywhere. If anything, it's ramping up. Success rates aren't declining on the fraudster side either, based on the survey results we're seeing. They're still having a lot of success. So remains a very top of mind topic. And then the rise of the machines here, which is, I love that title, but the use of AI and machine learning and starting to make its way into a lot of different treasury products, probably most predominantly into a lot of cash forecasting solutions these days, trying to leverage AI and machine learning, as well as beginning to make its way into fraud detection solutions as well, to be able to give another weapon in detecting those anomalies in your payment activity. The one thing I'll say about this is there are some corporates that are of the other mindset as well. Just, they're looking at AI and machine learning being sort of a largely unregulated market right now. And, do I really want to give something that's unregulated and learns autonomously access to my most critical financial data? That makes some people nervous. So there are people kind of sitting on the sidelines of this at the moment too, but others that are certainly going full steam into this. And I think you can clearly see, and I think the fintech providers are obviously investing heavily in this. just to be able to deliver on the use cases that corporates are looking for these technologies and how it can kind of make all these solutions better. So.
Well, after the rise of the machines, there's certainly the rise of the product roadmap. The content we talked about before is you can't build a record on what you're going to do, but you do build upon what you've done. So what the tech firms have done, if they're achieving success, this is very important. It shows proof of delivering on the commitments and commitment to products and solutions over time. And, having a vision for the future helps companies see where the company's planning on going. Is there good alignment? And this is vital for anybody who's investing in the different types of tech. You want a product, you want a partner that asset is going to increase in value over time, not stay stagnant, not decline, but grow in value over time and growing in mind share, having a well-developed historical and future roadmap. Ask about roadmaps when you're talking to people, when you're talking to the vendors. On the risk management side, we just spoke about that, FX and IR exposure, how important that is. And I mentioned about counterparty risk, the idea that we have companies that are concerned about them. 1/3 have certain significant exposures. Wherever there's a significant exposure, that should be managed and should be monitored. And so this presents other opportunities that excellent Treasury folks will work and manage. With that, John, I want to thank you. And I also want to thank Brian Weeks. And if you want to type Weeks as a thank you, because I keep asking him to add up all the people who type TIS in the chat box, to put up different links in there, just type Weeks. That's a way of saying thank you to him. But thank you, John. We'll turn it back over to Brian. Thanks, everybody, for joining.
Oh, my. Thank you, Craig, and thank you, John. Thank you, everyone, for joining us today. The CTP credits, today's webinar slides, and a recording of today's webinar will be sent to you within 5 business days. And for more in-depth analysis of the 2023 Treasury Tech Survey, be sure to download the survey report by clicking the link in the chat box. Thank you, and we hope you have a good rest of the day.